And welcome back to the marketplace. We begin with this warning from the World Bank that the Ghana cedi may continue to come under pressure this year against the dollar. This, the World Bank says, may occur if efforts are not directed at controlling the country's current account deficit to a sustainable level. The caution was captured in the World Bank's latest Global Economic Prospects report. George Afe has more.
The World Bank in the report maintained that the development presents government an opportunity to take some extra measures to manage the current account deficit for this year. This is to ensure that things doesn't get out of hand in the coming months. The bank argued that there might be the need to institute policies that will boost exports, a move that may go a long way to check the larger current account deficit whilst controlling the larger imports. The bank believes that introducing some of these actions, together with policies aimed at checking inflation in the coming months, will help in stabilizing the economy and deal with some of these threats that would impact negatively on the local currency. The warning from the World Bank is coming at a time that the Ghana cedi has started feeling the first quarter pressure, now getting into the 12 Ghana cedi range to $1, even for some of the major commercial banks. There are fears that if Ghana is not able to secure an IMF deal by the end of the first quarter of this year or latest in the second quarter, then things might not be really good for the local currency going forward, as well as the larger economy. According to the 2023 budget, the current account deficit the first 9 months of 2022 was estimated at $1.83 billion, compared to $1.86 billion in 2021.
Now to the controversial debt exchange program. Associate Professor at the Finance Department of the University of Ghana, Professor Daryl Kwawu, is warning of dire consequences for the economy if government fails to intensify engagements on the program with the various stakeholders. According to her, it is imperative for government to be transparent with individual bondholders on the program to ensure no party loses. Professor Fiado's call is coming at a time a group of individual bondholders is planning to sue government over their inclusion in the debt exchange program after initially being spared. Reacting to that, Professor Fiado said government must deepen the negotiations with the bondholders in order to arrive at a decision that will be embraced by all.
In terms of how they should go about it, it's more to do with stakeholder engagement and buy-in. Clearly, it's not rocket science to realize that I think we borrowed more than we should have, and that is what has brought us here. But in fixing the problem and making sure that no party loses, it's more to do with engagement and also to begin to meet the people at the point of their needs. So, of course, we'll have to identify some the very vulnerable areas that we need to look at, and in that regard we should be able to come up with what would appear to be a win-win, not so great of a win-win given that we are in a very volatile setup, but I think something can be worked out. Identify areas that government could, should I say, in fact, put it bluntly, their choices are quite limited anyway. So I foresee a case that in their need to meet the IMF conditionalities, I think they have no choice but to go the route. But the question then is, the implementation requires a lot more of engagement with the affected parties so that you get a bit of buy-in. A buy-in would actually, should I say, stabilize the situation a bit faster.
The Individual Bondholders Association of Ghana has cautioned government against the inclusion of its members' investments in government's debt restructuring process without engaging with them. In a statement, the association warned that any disregard of this caution will be met with the fiercest resistance yet from members. Let's bring in Associate Professor of Finance at the Andrews University, Professor Williams Pepra. Happy New Year to you, Prof. The pushback from individual bondholders is getting fierce. We are not making headway, and the government may be in a difficult position.
Good afternoon and Happy New Year to you, Daryl. Daryl, this was anticipated. Normally, IMF advised that anytime a country is trying to go into debt restructuring, you need proper consultation with the creditors. If you look at our case, because of the time, the shortening of time, government could not do that. And all we have seen that um, most of the issues that government has come out with has come to meet some form of challenges. So individual bondholders, I mean, they are within their right to request for engagement with government. Listening to the news, I noticed that what they really want to see is that government is also taking part of the burden sharing, which is probably missing. So they feel that like government is only pushing everything on the individual bondholders. That is why we are seeing this particular challenge. So it's the onus on government to demonstrate that they are also taking part of the burden sharing. I'm sure that the 30% salary reductions for political appointees is not sitting well with individual bondholders. Um, Possibly the talk of government reducing its size and also properly restructuring the government to reduce duplicity of activities and roles will really help. So as you heard from Alan Chamartin, I think that he's also pointed it out that it is time that we do this. Government must give that signal that I'm also prepared and taking some kind of measures. The government must portray that yes, we are poor, and he's living in that kind of life, but not to show a different lifestyle to Ghanaians. That is why we are seeing these particular challenges. On the other side of a bond instrument, I come back to financial education. People or individuals have the view that when you purchase government instrument, there's no risk. It is not true. Any asset on this earth has a risk. So in the case of purchasing a country Ghana bond, there's what we call the country risk. So as you were anticipating a return, this situation is also should have been anticipated, so that the hopes should have been toned down. But that kind of education has not gone down well with Ghanaians. We always think that if you invest in government instruments, it's a safe haven and you will not lose your money. But in finance, we know that government is also carries some risks. We call it country risks, like we have seen sovereign risks, and that is why this is happening.
Well, we heard earlier from Professor Vera Fiado, who is urging government to intensify negotiations with the individual bondholders. You say that the onus is on government. How else can government convince these bondholders?
I mean, government will be able to do that. If they tell Ghanaians why we got to this stage. You know, we have been in denial for a very long time.
But I guess a lot of people know why we are at this place right now.
They want government to admit and speak that one to their faces. That is why they want to meet government. And I'm sure government has also been mindful, being a political party, does not want to suffer some kind of damages. So they are also hiding behind consultants and writing into the media. That's why this is not happening. But from the way the discussion is going, that kind of engagement is needed. It may derail government program or time plan to get the IMF deal coming in first quarter this year. If government wants to go on that line to go and engage individual bondholders and tell them why we are broke, why we are in this insolvency situation, and why they must agree to accept some kind of debt restructuring. Let me put it also that government also have the option to go to IMF and ask IMF that I am having challenges with my creditors. Can you lend money to us in arrears? Meaning that we will accept, or we are not going to do a debt restructuring, but we are going to accept all claim payment. But we will tell our creditors that whenever we have money, we will pay. So that is the other option to government to convince IMF why they must lend to Ghana in arrears. IMF is requiring that we show debt sustainability. But from what is happening, it's going to be a challenge if government really wants to go on that route to me, their best bet is to look at going to IMF to tell them that we are having challenges with our creditors. So we want to tell our creditors, well, we owe you, but when your bond is due, we will defer the payment. Anytime we have money, we will pay you. Sometimes it will really soften the grounds, and then government may use stagnation to be able to raise revenue. And when IMF money comes, you'll be able to use that one to support government projects. Also, there are some of the bonds that really, looking at it, the inflows are guaranteed. Like ESLA, it is tied to some kind of inflows. We are Ghanaians already paying the taxes. So it doesn't mean that government is going to suffer any major challenges. Can that one be excluded? Because Ghanaians are already paying the taxes, and when the tax comes per the agreement, government will use that one to pay investors.
I guess
that kind of, we call it debt profiling. It must be looked at by government as well.
while we look at the other options, I guess one of the reasons people are opposed to this is because they hear government talk and not act. For instance, there are questions about the size of the government, which people have raised, and so far, no action from the president on this matter.
I mean, I'm sure that he must currently, if he engages the sentiments of Ghanaians, this is something that Ghanaians want to be done. The size of government really needs to be looked at. Let me put it in a simple terms. Once you are rich, now you are poor. So you live as a poor man. You don't continue to live that you are rich. So that is what Ghanaians want the president to do, to admit that we are poor. Yes, we believe that you can turn things around, but at the moment, live as a poor man to reduce the size of the government.
Okay, so does the March date for the IMF board approval seem likely now, following this stiff opposition from bondholders, and what would be the implications?
I mean, it does not. When we take the local investors, where it doesn't seem to be very good, that government will be able to achieve the March date. It depends on the kind of discussion that will happen with the external debt holders. That one too may also seem to drag a little bit. So there's probably, to me, there's that probability that we will not be able to get this deal signed in March until maybe IMF meets in the middle of the year, which is June. What IMF is waiting for is that we come to them with assurance that we have a plan for debt sustainability. The posture of the local domestic investors are not very good for Ghana to get that deal signed by the end of March. Unless IMF itself may also try to come in and really assist Ghana. Already, we've heard of the talk, IMF leading the discussion to ask multinational companies to give us some debt reliefs, and then the Paris clubs to give us debt relief. So maybe if IMF will really want to assist Ghana and Gambia, for instance, they themselves will have to waive that restriction on the line that you need to show debt sustainability before we give you funds. If not, it will be very difficult for Ghana. The Ministry of Finance and his team must go to IMF. I mean, it's some kind of, we plead, and then some sober heart to convince them that if you don't come to our aid, our country will be in difficult situations.
All right, we've run out of time. Thank you so much for speaking with us, Professor Williams Pepard, the Associate Professor of Finance at the Andrews University. And thanks for staying with us here on The Marketplace. My name is Daryl Kwawu. I guess many people are wondering what to do with their monies as the controversies about the debt exchange program continues. This week, we started an important series on financial planning in an austere economy, a crucial conversation to have during these times. So we have spoken about the importance of financial planning, the steps, the rules, and much more with other professionals. To continue this conversation is Prosper Melome, who is partner, corporate transactions and investment banking at Bridgewater Advisors Limited. Happy New Year to you. Great to have you in studio to talk about this. So there are numerous purposes of financial planning. Let's start from that.
Right. So let me just say Happy New Year to all your viewers. And I'll take it off from, when we talk about financial planning at large, let's look at the current situation we are in. We are talking about austerity.
Yeah.
We are talking about a difficult economy at large. And so we can look at it from three main angles. One, looking at your objectives as a purpose. Achieving your objectives is critical, and therefore you have to consider financial planning.
Mm-hmm.
The next aspect of this is perseverance of capital. So preserving capital is a core component of financial planning. And often when you talk about financial planning, a lot of people go on about investment. But there's also the consideration of preserving capital. It's a core part. And then we also have the element of hedging risk. So there's a lot of risk in the environment. I think earlier on we heard a professor talk about the fact that there's an assumption about government instruments being risk-free.
Right.
I mean, that's the belief, in finance. But then there's definitely some element of risk. And because of these uncertainties in our environment, we have to always think about ways to mitigate, to reduce this risk. And that is the reason why we consider financial planning.
I guess a lot of people are tilting towards preserving capital, especially during this time. But let's talk about the benefits of financial planning, especially during these times. As we talk about debt exchange program, people's investments, they don't know where it's going and all of that.
Yeah, so I mean, it's embedded in the purpose.
Yeah.
So we are looking at the issue of December inflation was around 54%. So basically, if you have a CD, you've lost more than half of that value at that time. So when we talk about benefits of financial planning, you are able to consider things to do within these times to more or less prevent the loss of value. Now, in our economy, it's really difficult currently, given the circumstances. The real returns are negative. Most assets are not yielding certain returns. But at large, the core value here, or the core benefit here, the core takeaway is to put in mechanisms and ways to preserve value. That's a core thing. Let me say a benefit in financial planning.
Well, based on your experience, I know businesses would tend to plan financially, but do you get the sense that individuals are doing this?
Well, I would say, the whole spectrum of financial planning, one, is a mechanism towards achievement of goals and objectives. For individuals, yes, to some extent, there are considerations when it comes to financial planning. But I would say the issue is the level of sophistication when it comes to financial planning is quite low, and the reason being financial literacy within our market. So for individuals, not as much. For businesses and corporates, there's usually the following of a corporate calendar that has embedded in there some level of financial planning. So for individuals, not as much.
And when I hear news like what we've been discussing about the debt exchange program, I just tend to fear that people may just, the sort of progress we've made towards getting people financially included, or the financial inclusion agenda, may be stalled a bit, and that's a concern, isn't it?
That is true. That is a reality. I mean, so much has been done, even without the debt exchange bit. Let's talk about even when it comes to the mobile money component.
Yeah.
In terms of financial inclusion, we are looking at the taxes, the e-levies that are being applied to this. So definitely that has an impact. Debt exchange in this particular scenario, T-bills have been excluded so far, which has a lot of the everyday people.
For now.
Yeah, for now, let's say for now. So yes, there's the issue of that having an impact on the wider market in terms of how this is viewed.
Okay, and so that leads me to my next topic. We sort of mentioned it before we came on the air about creating an investment portfolio during these times. How do you use a financial plan to create an investment portfolio? Well,
so let me say first and foremost, when it comes to investment portfolios, it's an issue of an individual, it's on individual basis. I would say first, and I would like to put in this key component of one needs to get proper professional advice and guidance by qualified licensed professionals in order to begin to think about investment portfolios. That said, when it comes to portfolios, there are some few things to consider. Your objectives are crucial. So we are looking at your short and long-term objectives. And then the second thing is looking at your risk profile, the kind of risk appetite you have towards, let me say, investments. And then we look at your liquidity needs. Liquidity practically meaning your need for cash.
Okay, and looking at the current circumstances, if I have money, because people are now wondering what to do, what would you advise?
Well, that would be a difficult...
I know it's based on an individual's tolerance of risk, for instance, when it comes to maybe an investment portfolio, but what are the options? What can we do?
So generally, the atmosphere... let's paint a picture of the atmosphere. Earlier on, I mentioned the issue of high inflation. Mm-hmm. So we having high inflation, meaning that, by default, you are losing value, right? So the first thing to think about here is ways and means to preserve value. And the way to think about it in simple terms is you need to find, it could even be profitable ventures, right? To generate returns that puts you at least at par with inflation.
Any ideas, profitable ventures?
Well, you may have to see. But generally, you would want to come at par with inflation. And if inflation is very high, then that makes it very difficult.
Wow. And during these times, as we've talked about financial planning, I hear a lot about controlling, monitoring, directing. Tell us about the steps to be an efficient financial planner. What can a business do? What can an individual do?
Right. So that's a really good question. When it comes to the steps, I think everything boils down to the objectives, right? Your objectives has to be clear in terms of what the short-term objectives are, what the long-term objectives are. That is definitely clear. 2, there's a need for professional advice. Okay, so I mentioned one of the challenges within our market.
Is it expensive to get professional advice?
It can be. It can be expensive.
That's discouraging, isn't it?
Not necessarily. So when it comes to the wider level of financial literacy, there's a lot of government intervention. We even have, for example, the SEC doing a lot of market education, and over the years, we've seen a lot of progress within our investment industry. And so you have a lot of market operators and players within the space educating the masses. So yes, there's that free education that is out there. But that aside, when one wants to go or embark on a specific agenda, it's important that you get financial advice from professionals. All right? So that is a core step to take. Now, with that step in place, one must just be committed to the process. Everything boils down to the kind of advice that is structured for the purpose of financial planning.
I'll give you 30 seconds or 20 seconds to just say something to our audience right now.
Right.
A tip, something?
Well, so generally, when it comes to the current economic environment we find ourselves in, the best thing to do is to look for ways and means to preserve value. And that is the whole idea. I would say, from my opinion, the agenda is to preserve value. This is not the time to go on wild and aggressive endeavors.
We learned something new. Preserve value. Prosper Melume, partner, corporate transactions and investment banking at Bridgewater Advisors Limited. Thank you so much for your time. And that's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. We will be back same time tomorrow. Goodbye.